But for every bear in this name, there's like 3 times as many bulls. I mean, that's just a fact. At this point, there's 46 analysts. There are 21 holds, so there is a more neutral stance, but there's 18 buys and then there's 4 sells. So you could argue that, well, there are those that are bears in this name, of course, naturally in balance, but there are so many more that are enthusiastic, like Dan Ives. And I will say, all things considered, this name has seen a significant pullback. It's down about 20% off its highs. It's still up 103% this year. There is no auto player even close. I believe the closest one is Li Auto, which is up 89% this year. Totally different company at this point. NIO's up 2.5%. And then you look at some of the U.S. players in the auto space. Rivian, 24%. Lucid's down 15% this year. GM and Ford aren't even on the map. So that's always my argument, is like, well, you could be pessimistic on Tesla shares, but they speak for themselves in terms of their year-to-date performance.
Did you know that if you own just 110 Tesla shares today, you could become potentially a millionaire in just 10 years? This is a step-by-step guide on how Tesla stock will yield millions of dollars for investors in only a decade from now. So stay tuned as we navigate through this money-making ride. To get the real idea behind Tesla's profitable future, it is important to know that Tesla's core mission revolves around hastening the world's transition to sustainable energy, as well as creating innovative solutions that are designed to mitigate some of our planet's most pressing challenges. The thing is, Tesla is not just about making money, but doing so while providing solutions to vital global issues. Think of self-driving cars, solar panels, robots, and even robotaxis. All of these are innovations that cater to fundamental issues. They're designed to solve a problem. For this reason, investing in Tesla transcends mere financial growth, and in reality, it represents a commitment to environmental and societal impact. This company is not just another automaker. It is a driving force behind the global shift to sustainable energy. We've heard it numerous times from Tesla's CEO Elon Musk himself. As a Tesla investor, you are actively contributing to a pivotal global initiative. There's also the financial part too, and that's where we'll be pitching our tent in today's video. How can Tesla investors make millions of dollars from their Tesla shares in just 10 years? That is the million-dollar question we are about to answer. Let's dive in.
It seems like this company is going to be that tech company that leases, product and innovation and tech to a lot of the other major players and mostly their competitors.
Well, it's one of the benefits of being a cult following. You get a cult following, you can talk about things and get benefit from it. And Tesla, I think, frankly, has gotten that from the very beginning. As you said, the self-driving cars are, 5 years behind schedule? I think the Cybertruck was first announced in about 2004, maybe, or something like that, maybe 2014. But it's been a long time. And I know they're building them right here in Austin, Texas, where I live. And the factory is pretty impressive when you see it. But again, they continue to miss deadlines on everything, but they still have a cult following. The people who buy Teslas love them. I've talked to a lot of people. I've only ever had one friend I've ever spoken to who bought a Tesla and didn't like it. And it was for the same reason that a lot of people won't buy them. And that is that they were regularly traveling back and forth between Austin and Colorado, and they got really frustrated with the charging network. But this, again, goes back to what Kevin was talking about earlier with the iPhone, is that if you want widespread adoption of anything, and if you want to make something a standard, you've got to get everybody to adapt to the same thing. And USB-C is pretty universal everywhere. Apple has been a holdout for a very long time. They're finally going to go to that. Likewise, you're seeing the same thing happening with Tesla.
What sets Tesla apart is its diversified revenue streams, including energy solutions, software innovations, and service offerings. This is a company with unwavering dedication to innovation, and it is evident in Tesla's leadership in its electric vehicle technology, autonomous driving capabilities, and pioneering battery advancements. When you invest in Tesla, you participate in the growth of these dynamic sectors. And what this means is that as a shareholder, you align yourself with a company that is consistently pushing the boundaries of technological progress. Hey guys, welcome back to Tesla Tomorrow. Tesla excels in technology and efficiency, boasting some of the industry's most advanced manufacturing capabilities and software development efforts. This translates into the most efficient and reliable EVs on the market, offering high-performance, long-range capabilities and low-maintenance costs. In reality, owning Tesla shares indirectly contributes to reducing greenhouse gas emissions and air pollution. It also supports improved vehicle safety through advanced safety features and autopilot, and provides clean and affordable energy solutions for homes and businesses. This is what an investment in Tesla means, and there's absolutely no way that it won't be profitable. Before we carry on though, if you like this type of content, hit the like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. EVs are going to form a huge part of Tesla's future revenue, and already, EVs are starting to smash all kinds of records in places like the United States. For the first half of the year, EV shares of new cars exceeded 7%, speeding past a critical tipping point for mass adoption. And in the last 12 months, all-time sales topped $3 million. But that's not even the most interesting part. In the 12 months through June last year, Americans bought 977,445 EVs, making for a record-hot pace of almost 1 million new EVs per year. What's even more interesting is that the story of the US EV adoption so far has been a tale of two dominant factors, and first of all is the state of California, with second up it's Tesla. California was the first top 10 global auto market to reach the crucial EV tipping point of 5% of new car sales, and Tesla recently dethroned Toyota as the top-selling vehicle brand, electric or otherwise, in the state. Tesla's influence on the EV industry is profound, and therefore investing in this company means supporting the advancement of clean transportation and encouraging other automakers to follow suit. There is a reason why seasoned investors are buying Tesla shares. ARK Invest CEO Cathie Wood, in a recent interview, disclosed that EVs make up only around 1/3 of ARK Invest's projected valuation for Tesla. The other 2/3 of its valuation is related to autonomous vehicles, and in particular, Wood believes that Tesla has a massive opportunity in autonomous ride-hailing, often referred to as robotaxis. Cathie Wood sees strong sales growth for Tesla EVs in the future, and this growth will be driven by the global growth of EV sales. Even analysts like Goldman Sachs are expecting electric vehicles to make up half of global new car sales by 2035, with the percentage rising above 85% in the US and EU. As of 2022, EVs represented just 14% of global car sales new in the regions. So we could say that the industry is still relatively young. Therefore, it makes sense for Tesla to sacrifice near-term profits to maximize its long-term market share. The car company's scale and profitability could potentially help it outperform rivals like Rivian or Lucid. And then there's also the energy sector. At Tesla's 2023 Investor Day presentation, its management highlighted a vision of becoming more than just a car company. The automaker plans to expand into more forms of clean and renewable energy. In the second quarter of this year alone, Tesla's energy segment generated $1.5 billion in sales, around 6% of its total revenue. On a year-over-year basis, this growth has actually seen the business going up at a rate of 74%, which means that it is expanding faster than the automotive and services sector, which grew 46% and 47% respectively. Judging from recent progress in the energy industry, it won't be a surprise if over the next 5 years, the energy storage and generation become the most promising non-automotive business verticals. Or even better, energy becomes an even larger percentage of Tesla's revenue, supporting top-line growth and giving it a much-needed form of diversification. Tesla is seeing this, and it is beginning to invest heavily in the business, particularly in terms of infrastructure. In April, Tesla announced plans for its second megafactory in Shanghai, with plans to produce 10,000 storage batteries annually. With this new factory, Tesla could help lower costs and increase the availability of its energy products. Tesla battery packs are engineered for longevity and the potential for recycling and reusing in various applications. Their solar panels and roof tiles combine aesthetics with durability, while their battery storage products provide backup power and grid services. Simply put, Tesla's products are just one of a kind. With this ongoing commitment to innovation in electric vehicles, clean energy and autonomous driving tech, we believe Tesla is well positioned for future expansion, meaning that for investors seeking a reliable stock for their portfolio, this is actually the real deal. But what do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.